Hello, Dilly. How are you?
Hello, George.
So, do you approve of that song?
I like that song. That sounded good too.
You like that song? That's
Hmm.
great. Well, it's indirectly, it's Eisman gets the credit. So, if everyone wants
Oh,
to know,
really?
yeah, everyone wants to know where I get these songs from, and it's just kind of the spur of the moment thing. I have to send out another request for songs because I'm kind of running low on supply. But in any event, as everyone knows, that's when the levee breaks. But I learned something. I read it on the internet, so it must be true. So we all know
What
that's
did
from
you learn?
yeah. So we all know that's from Led Zeppelin, 1971, from their fourth album, was released on November 8th, 1971. But here's a couple things you didn't know. So number one, and Steve will weigh on this, in on this when he comes up. But I believe that song was the final song from the soundtrack of the movie The Big Short. That's where I got it from.
Yes.
But even more interesting, what I did not know, and I doubt there's anybody in this room that knows this, it was recorded. It was based on the Great Mississippi Flood of 1927. The flood affected 26,000 miles of the Mississippi Delta. Hundreds were killed, and thousands of residents were forced to evacuate. The event is the subject of several blues songs, the most popular being blah 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 blah. In any event, the song was first recorded in 1929 on June 18th, 1929.
Really?
Yeah, by McCoy and Minnie, and it was
Huh.
only Led Zeppelin picked it up decades later in 1971.
That's interesting. Did not know that.
Yeah, neither did I. All right, so another day in paradise. I can't keep. I don't even bother to look. I look at the market first thing in the morning, and then at the end of the day, I just, as we keep saying, the market has no institutional memory from one day to the next. It's buy high and sell low, wash, rinse, repeat, and you turn the talking heads on. Your head's going to explode. So it's just not even worth paying attention to. As we always talk on the show, we're trying to get the big picture right in the intermediate to longer term, day to day, week to week. As we know, there are spaces for those who want the stock of the week or the stock of the day. That's just not why you're here. At any rate, I'm absolutely thrilled today that we've got Steve Eisman with us. And Steve, Dilly, how many people did we have pre-register? It was like 500 something. I can't
Over
remember.
500. I think it was like 510, maybe.
Yeah. So, Steve, I know this is your first time on Twitter, and Dilly, you'd laugh. Actually, Steve did pretty good. He has a great in-house techie, his daughter Danny, and so Danny and I got a thing going. So
Oh.
I'm shocked. Steve was like one of the first people into this room, and my hat's off to Danny because Dilly, we've had trouble with certain boomers trying to get in this space on time. So, Steve, I want on behalf of Dilly and myself, Steve. Welcome, and I want to give a big shout out to your daughter, Danny. How are you, Steve?
I'm good. Danny's right here, but she's about to leave. I think she's had enough.
Let's have a big shout out to Danny.
Yeah. So, Steve, I just want to warn you. Yeah. Steve, I just want to warn you. Don't roam around the house or go outside too much because if you lose connection, then you're going to have to log out and get back in. This app has been incredibly glitchy the last few months. So we're deeply indebted to your daughter, Danny. So,
Danny has now left the building.
Danny has left the building. Oh, no. Oh, no. All right. So Steve requires no introduction. Um, Steve, were you like a heartthrob? You weren't New York's most eligible bachelor before The Big Short, were you? I mean, like, were you just kind of like another, regular investment guy? Like, how big a reach or name brand recognition did you have before the movie came out?
Um, the only people who really knew me would be like, people who knew financial services because I was a sell side analyst in the 90s at Oppenheimer.
Right.
And so I was pretty well known for that. But other than that kind of narrow world, I know no one knew who I was.
Yeah, it's a pretty nerdy thing to do. I mean, when I grow up, I want to be a financials analyst. Like, I don't think so. So, Steve, let's have some fun here too. We're gonna go all over the place. Okay, so let's start off just with. I just want to ask you and I talked a little bit a couple times on the phone, and I'm just looking here AI overview when I Google The Big Short or do a Chat GPT search. It says The Big Short's generally considered reasonably accurate portrayal of the events leading up to 2008 financial crisis. Though it does take some liberties with the characters and events for dramatic effect. The movie accurately depicts the rise and fall of the housing market, the creation of the manipulation of the mortgage-backed securities market, and the role of hedge funds in betting against the market. Okay, fine. What I want to know, I mean, the external stuff, we're kind of, most people in this room know all about that. But I'm kind of curious, and I'm sure you've seen your movie. Um, how I mean, of course, Hollywood always got to, they take, it starts with facts, but they always got to make a good storyline. How reasonably accurate, if not in detail and substance, was the movie insofar as what you guys were doing?
I would say the movie was very, very accurate with some, with some what I would call literary license. For example, the way the movie depicts it. Um, can you guys still hear me?
Yeah, we got you. We got you. Keep going. Yep.
Good.
Oh, yeah.
The way that the movie depicts it, we like worked for Morgan Stanley. And technically that was true, but Morgan Stanley had bought Front Point, but we were like an independent operation within Morgan Stanley. So uh, we never interacted with Morgan Stanley at all. And the movie made it seem like we were part of Morgan Stanley. That would be the only aspect that I would say that was somewhat inaccurate.
Okay, so let's talk about Morgan Stanley for a second. It's kind of curious. So, as we know, Morgan Stanley got nailed pretty hard. I happen to know pretty well the former co-CEO Zoe Cruz, and as it came out, the controls were pretty lax, and there were decision makers, risk takers at Morgan Stanley who were doing stuff that it wasn't clear that everybody knew exactly what was going on. But anyway, forget about that. What I really want to know is your variant perception, where you saw the storm coming, and clearly the Morgan Stanley book wasn't positioned as such, which further lends credence to what you're saying. Did they ever ask you or look at your book and say, like, what the or like, you're smart guys, like, what are we missing? Like, did you have, or did you just like kind of wring your hands and you were like, I mean, maybe you didn't know exactly what they were doing, but you were like, oh my God, like the street is just, man, I know you had disdain for what the street was doing, but how did you think about Morgan Stanley and what they may have been doing at the time?
So that's actually a very funny story for that. Which I don't think it's ever been disclosed publicly before.
Okay.
Um, how to put so I would say in May of 2007, somewhere around there. Um, it was a very odd time because we were making money in our subprime trade literally every single day. Every single day, a couple of $1 million every day. And I knew it was a zero sum game, so I called a guy who eventually joined me, but back then he was sort of like my deep throat for the industry. And I called him up and I said to him, "I don't understand something. I'm making money every single day. Where are the losses?" And he said, "Well, why don't you call Morgan Stanley?" I said, "What do you mean? Why don't I call Morgan Stanley?" He said, "Well, there's this guy at Morgan Stanley. I won't name his name. It's in the book."
Yeah.
Who's got a massive subprime bet on from a proprietary trading desk within Morgan Stanley, and he said, "I think they should be nervous about it." So, so I figured, you know what, I'll be a good corporate citizen. So I called the head of one of the heads of Front Point, and I told him what I had heard, and I said, "Run it up the flagpole," and he did, and we never heard back from them. So then, at the end of the summer, this just kept going on. So I actually called someone who I knew within Morgan Stanley, and I told her the same story. And I said, "Why don't you run it up the flagpole?" And she did, and nothing happened. So then, after Morgan Stanley blew up because of this trade, I figured, well, you know what? Maybe these people don't know me. So why would they listen to me? So I asked the head of Morgan Stanley Asset Management to arrange for a meeting with Zoe Cruz, who you
Yep.
mentioned.
Yep.
So he set up the meeting, and it was like the day of the meeting, and they called us up. We were not in the same building as Morgan Stanley. We were a few blocks away, and they called us up and they said, "We have to cancel. We're sorry."
Ooh.
And then they rescheduled, and then they canceled again. And then they rescheduled. And on the day we were supposed to meet them like at 10 in the morning, we were literally about to leave to go, me and some of my partners. They called up and said, "Could you come at noon?" At this point, I'm getting a little hot under the collar. And so we get to Morgan Stanley at noon, and we sit there and wait for half an hour. And then finally, one of the people comes out and said, "We're very sorry, but Zoe has left the building. We'll have to reschedule." At which point I storm out cursing like F this, F that. I am this effing company. I am never effing coming back here again. F them. And then we get back to our offices, and then it comes right across the tape that Zoe was fired. And I turned to my traders and said,
Oh,
"Never." And I said, "Never mind."
oh boy.
Yeah.
So I knew Zoe going way back to the early 90s when I had her first hedge fund, and I was doing a lot of currencies. And Zoe, I think, was head of the FX desk. Really sharp person. I mean, let's not try to, get into revisionist history or whatever, but, I spoke to Zoe a few times thereafter, after Morgan blew up. And, in a big organization like that, you've always got, various generals, and it's not totally clear who's responsible for what. And Zoe, as a woman, advantaged her in some respects, but not in others. To a certain extent, Morgan Stanley was still a little bit of an old boys club, so it's kind of a unfortunate situation. Really was. Um, yeah, so I can remember. I'm going to play a clip from the movie later. We'll have some fun with that, but. So let's roll forward, Steve, to where we are today. You were managing, you were one of the lead portfolio managers at Newberger Berman for the last 19 years. I understand earlier in March this year, um, you left Newberger. You're semi-retired, although I have to put in the plug. Steve now has and Dilly, if you can go find it and put it up in the nest, he's got his own weekly podcast now. And I've listened to a
Yeah,
few.
it's called the Eisman Playbook.
Gee, where'd that name come from? Okay, Bill, if you could please go
I'll
find
do
it, put it in the
that.
message.
Also, can we have everybody retweet the space? I just got a couple of messages that people aren't getting the notifications, probably because we had so many people reply for the notification.
Yeah, Steve,
So,
you broke the system.
yeah,
I'm sorry. So
I'll put it up in the
so
next
anyway,
though.
yeah. So Dilly, put it up in the nest, all right? So Steve has a podcast. Got really good people on. I watched your episodes recently with Ivy Zellman, an old friend, and then the boys. You had Porter and Danny and Vincent on. So, and not to mention a whole bunch of other episodes. So everyone should be watching Steve's episode every week. It's really good. He's got a big Rolodex, and highly informative. And the great thing about watching it on YouTube, of course, is you can put it on 200% speed and just block out the people you don't care about. So, Steve, let's go to where we are now. Okay. I saw you were on Bubble Vision, aka CNBC. I think it was April 15th. I wrote down here, and you were cautious, which turned out to be pretty prescient, although whatever, the mark's crazy. I'm not going to mark anybody to market on a 1 week or 1 month view. And you were pointing out the incredible uncertainty were coming from the man in the White House. And I'm just kind of curious. A lot of people in this space, I'm sorry to make a long-winded question, Steve, but I want to give context. Many people on, in financial media and research, they talk about the past. There's what's known as descriptive commentary, which really isn't all that useful. And there's stuff which is predictive, i.e., I think the market's going to go up, rates are going to go down, whatever. And there's stuff which is prescriptive. With that prediction in mind, what do you do with that? Do you buy bonds? Do you buy housing stocks? Do you buy the long end, the short end, whatever your view is? Okay, fine. So, Steve, given where we are right now, and given that you were, a bit cautious a month or so ago, could you update kind of your mark-to-market view on what do you think is going on right now? And more importantly, it's not so much what's going to happen, the next 90 days or whatever, and these reciprocal tariffs, but it's kind of like your bigger picture view. Like, what are your really strong held convictions? 'Cause, sometimes it's confusing. You just don't know. Other times, Mr. Mark's giving a lot of fat pitches to hit. So, kind of mark to market where your views are right now, and what are you really convicted on right now in the world?
Well, that's not as they said in Finding Forrester, the movie. That's not exactly a soup question. Um, so you have to watch the movie to figure out what that means.
All right.
But
Well, I have this annoying habit of not asking easy questions. So go ahead. Go on.
that's what it is. It's not an easy question.
Well, that's why people come on the show because they
Right.
like I ask smart guys like you annoying questions. That's why they come on here. Go on.
So I've been bullish for years. For multiple reasons. Number one, I believe that Daniel Tarullo, who was the first vice chair of financial supervision post Dodd-Frank, did a tremendous job cleaning up the financial system of the United States. So it's not something I particularly worry about very much at all, which is very important. Um, and I think that the U.S. economy has never been more dynamic in my lifetime. From AI, infrastructure, you name it, there's a lot been happening here. And so, generally speaking, I'm pretty positive. The caveat is that if there's a trade war, there'll be a global recession. Now, I find it difficult to handicap. The headlines over the weekend were fine, but to quote my favorite philosopher these days, Reacher, from the TV show on Amazon Prime, Reacher, who likes to say, in any investigation, the details matter. Well, in any trade negotiation, the details matter, and we have no details about any of this stuff right now. We just have, positive headlines. So till we'll know, we won't know. And until then, I think it's going to be very volatile, and then we'll see. But right now, people are trading headlines, and it's very difficult to make any real long-term investments right now.
So, given the prevailing uncertainty, which as a financial guy, as always, you well understand that markets are okay with pricing risk, but it's hard with uncertainty. So, given the prevailing uncertainty, does that mean that you'd want to have like maybe smaller exposures than you normally would have because you just don't know?
I've taken some of my exposures down. I'm still pretty invested, but I have a little bit more cash than I have. Um, but that's all I've really done. If there's a recession, there'll be a I'm pretty relaxed about it. If there's a recession, there'll be a recession, but it's not going to be a financial calamity,
Got it.
and then we'll come through it eventually.
So this clickbait headline I put up here, and by the way, before anyone blames it all on me, because I'm always accused of being the bear, Eisman liked the title. It's a great clickbait headline. So the reason, Steve, is we agree, we put up as a question. Nobody really knows what you were going to say. So just to get this out of the way up front, I mean, it's fair to say this is not 2008 all over again, if I understand you correctly.
Not even close. I mean, I, I'll, I'll tell you a funny story. So I remember, um, I think it might have been like in 2007. I went to some charity event. It was like around this time of year. So it was probably like May 2007. And I sat down next to a guy who was like an investment banker type. Um, from some firm, I can't remember where, who was a father at the same school that my kids went to. That's why we were at the same event. And he didn't know me from the hole in the wall. And he says to me, "Hey, well, so what do you think about what's going on in the markets?" Back then when somebody asked me that question, I told him, and I gave him basically Armageddon. And he looked at me like I was a raving lunatic. And then 2 years, we didn't see each other for 2 years. And he said, when we had that conversation, he said, I thought you were a raving lunatic, but it turned out you were right. But I haven't felt that way in a very, very, very long time.
That's fair. And Steve, I mean, as opposed to yours truly, you strike me as being a pretty, this is a compliment, not an insult, normal, well-adjusted, not Pollyannish, not not doom porn kind of guy either. I mean, you're kind of up the middle, like you kind of call him like you see him. So I mean, usually if you throw a bear case and Armageddon at a bear, a lot of these congenital bulls, they'll go crazy, right? And flip side, hardcore bears have a real problem with bull stories, but you sort of go both ways, as it were. Is that fair?
I think that's very fair.
Got it. So Steve, given your background, you applied your trade and financials, and it's such a key sector to follow because everything flows from that. Do you tend to, as you invest, do you obviously you probably still pay close attention to financials, but do you kind of stay in the financial sandbox a lot, or are you kind of like more
Not
diversified, a lot
not at all.
diversified? Not at all.
Not at
Okay.
all. Not at
Okay.
all. I am I'm like the most story oriented person you'll ever meet.
Oh God, you're a narrative guy. Oh yeah. Okay. Don't.
I'm a narrative guy. I read novels. I have one of the largest digital comic book collections on planet Earth, 11,000 comics. Um, I love stories. And from the time I started analyzing financials in 1992, basically through the financial crisis, call it through 2009, the financial services sector was like one of the most interesting stories out there. That's what really kept me wanting to analyze it because it kept morphing and changing and it was sophisticated and it was complicated, but it was a story. At first, it was a good story and then it became a really bad story, but it was a story. But after 2009, it hasn't been a story. There's been no story in financials. There are cyclical trading vehicles. There's no secular story for the group that would get you really excited about it. So I've moved on to other stories like in tech, infrastructure, etc. But that's who I am. I'm just very story oriented, and I always have been.
Okay, so given though you probably still watch the financials pretty carefully, I'm a macro tourist, jack of all trades, master of none. I mean, I've come to understand that the financials got really, they were recapitalized, and you spoke about the sector got cleaned up, got recapitalized. They become more utility like. They can't be levered, a zillion to one anymore like they used to be. So it's hard to get in a lot of as much trouble as they were before. So whilst the financials may not be a sector you invest a lot in, as you look at what's going on there, you can learn a lot about the rest of the economy, whether it's housing or the consumer or whatever particular small businesses, whatever you're looking at. So, what's your takeaway from looking at how what the financials are doing, what they're seeing? I mean, you have this tremendous, for instance, proliferation of non-bank banks. You got private credit, all this stuff. A lot of this is because of regulatory changes. So, what sort of tells for the economy do you see by looking at the financial sector right now?
Well, in terms of my old standby, what I like to look at consumer credit quality, I don't see any real warning signs at this point of any real significance.
Okay.
It's still pretty benign. Um, I had a guest on my podcast, an old bank hand, Charlie Peabody, um, who got rhapsodic about how the next crisis will take place in the private debt world,
Right.
private equity, et cetera. And And what I said to him was that you could be right, but there's a big problem with the thesis. There's no data. And what I mean by that is, when I was short subprime paper, in the middle of the month, every month, over 2 days, every single subprime securitization reported all of its credit data. So I had a negative thesis, and I could check that thesis against a ginormous database every single month. All you can say, all you can do when it comes to talking about private equity and private debt is pontificate. But
Right.
there's no data point that you could point to that says, aha,
Sure. So, Steve, that could work both ways. That could be like, okay, nothing to see here. Move along. It's bear porn.
until it blows up.
Yeah, exactly. The flip side of it is, it's like, what are the tells exactly? Like, come out of left field. No.
It could, absolutely. But I'm not going to lose oversleep over something that I can't even track.
Okay, now let's go on to something else. The yield curve, all right,
Yes.
and interest rates. Okay, so have been and continue to be concerned about Treasury bond yields. I think we're not witnessing a credit crisis. We're actually more likely to see a sovereign crisis. In other words, the excess credit accumulation has not occurred in the private sector, but in the public sector. All right. And so, how do you think about, and so for instance, when we look at tells, I'm sorry for interrupting myself, it's just what I do. People point to spreads, tight high yield spreads as being one of the tells the economy is in good shape, blah, blah, blah. Okay, fine. Job claims have been muted, blah, 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 blah. But you see the 10-year, really poking its head up. And given the outlook for fiscal rectitude or lack thereof, And given the fact that there was a growth impulse starting to occur in the rest of the world, increasing pressure on the dollar, concerns over the dollar, the whole blah blah blah. Will foreigners continue to put money in here? Blah 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 blah. So how do you think about bond yields and how it impacts the financial sector or the economy for that reason?
So let me just respond to your little diatribe right
Yep,
there.
yep.
I think I'll quote my grandfather of blessed memory, who would have said, literally at this moment, he would have said, "Ärgere nicht,"
Yep.
which is Yiddish for "don't aggravate yourself." Uh,
Yep.
my grandfather had some wonderful sayings.
Yep.
Um, the way I think, look, if you want to paint a negative picture, you'd say the following. You would say there's too much government debt. The fiat currencies have been debased. At some point, the dollar is going to lose its reserve currency status. Cats and dogs will then lie down together. It'll be Armageddon, and we'll all be hiding in caves. That's the thing. And my response to that is on multiple fronts. First of all, I heard that speech by Pete Peterson in the '90s, and he thought it was right around the corner back then. So this argument has been made for 40 years. And, in our business, as timing is everything. But, if I have a criticism of myself as an investor, is I have had a tendency to be too early. But I'm not 40 years too early. I might be a year or 2 years too early. When you're 40 years too early and you're so Pollyannish about it, maybe you should have a little humility and just say, you know what, I don't
Sure.
know what the hell, I don't know what's going on
Yeah,
here.
and I think that's so right. I mean, nobody knows nothing is the line I keep using from this one Hollywood writer, William Goldman. But let me just friendly rebut what push back
Well,
on
wait,
you.
but before you do, let me
No, go
just
ahead. Go ahead.
go to my second point.
Go on.
My second point is I do not believe that we are anywhere close to the dollar losing its reserve currency status. And the reason why I say that is that, you know, if you think about how does the financial system of planet Earth work? It functions on treasuries, overnight repos, treasuries, sovereign wealth funds. Where do they park their money? Treasuries. Why treasuries? Because it's the safest, most liquid market in the world. Now, if there was an alternative to treasuries, I would say then all the arguments that you were talking about, I might be more concerned about. But until there's an alternative, I don't see it as a problem.
Okay. You know what? I can keep going with questions, but we've got such a big room. I don't want to monopolize the questions. We have a lot of smart people in here. They're all friendly, Steve, so don't worry. They're not going to show for you, but they're smart guys. So,
They
guy,
can be not friendly, that's fine.
no, no. So we're going to take these in order because it's just we got a lot of people here. We got a big stage. Okay. So the first question is going to go to Bitcoin Tina, who thank you, Bitcoin Tina, very much for arranging this. Bitcoin Tina is responsible for today's speaker. So Bitcoin Tina, the floor is yours. Have at it, Bitcoin Tina.
Thank you very much, Steve. It's nice to see you here. And George, thank you very much. This is a bit of a blast from the past. Stephen is not a one-hit wonder. In the mid-'90s, he was short a stock called Ames Financial, and I think a few other companies as well of that ilk. What connections can you make between that period and Ames Financial and some of the others like First Plus, and then later on the GFC?
So the companies that you're talking about are what I would call subprime lending 1.0, which were companies like the best well known was a company called the Money Store. Remember Phil Rizzuto, the
Oh
Money
God, the
Store,
money store. Ay.
and they were public. And in 1998, the entire for very complicated accounting reasons and other kinds of reasons, a growth industry basically went bankrupt or got obliterated. And no one thought about subprime lending until about 2002 when the second, subprime lending 2.0 went public. Um, and the funny thing about subprime 2.0 is that most of the companies were run by the same guys who ran 1.0. They just changed the names. So, but so I always felt that the industry would blow up again because it had blown up once. What I didn't foresee is that in 2002, the volume of subprime mortgage lending in the United States was about 50 to 60 billion, and in 2006 it was 500 billion. So it just got a lot bigger, but it was the same people.
You know, Steve, when you mentioned the money store, I was thinking back already. You'll remember this. I think I know I'm a little older than you, but you're a little old enough to remember when, as they say, Eddie Antar and Crazy Eddie,
Yes, I
who,
remember.
who by the
I
way,
used to go
of
there.
course, and between us tribes, we said Meshuggah Eddie. Okay, so Crazy Eddie is now, I think, hanging himself out as a expert on fraud and whatever. So yeah, so it's funny, a blast from the past. All right, we got a lot of speakers here, but Dilly, there's a reason, there's a method to my madness here. I have a
Okay.
specific thing in mind. So Steve, we haven't talked much about housing, and you had Ivy on a few days ago. We have one of the best housing analysts in the country in our presence, Melody Wright. She's a friend. Everyone knows who she is. She's got her own Substack, and I'm going to show for myself now. She will be appearing, and I know you guys are all waiting for it. I promise you, within the next day or two, we're going to have the landing page and the website up for the conference. June 5th, virtual conference. Melody will be speaking on housing along with 10 other speakers. So, in any event, Melody, welcome to the stage, and you can ask more intelligent questions than I can about housing. So, I'll leave it to you, Melody. The floor is yours.
Thanks, George. Can you guys hear me?
Yeah.
Yeah,
We
you
got
sound
you.
great.
Excellent. So, Steve, this is a huge honor. The Big Short kept me sane in 2015 because I was in the mortgage industry. I was at GMAC, ResCap, whatever you want to call it. We had several names. So lived it from within the inside. Was also on the ground with the CFPB, the consent orders, the Fed. Trying to make sure the industry never messed up again, and that was a big part of my career. But as the mortgage business really transferred into the non-banks, I went out to try to help them get their houses in order from what we had gone through. And I started seeing some really disturbing patterns. I left the industry, but I still have servicing clients where I get to look in their books to see what's going on. And I had to disabuse myself of everything that I believed to be true about credit quality. Because what had happened is you'd had government kind of move into where the privates were, and they were using this, it's called an automated underwriting system, to give back these decisions. And so I started seeing things in government, in FHA, that were truly astonishing and much worse than what I saw in the crisis last time. So I then had to kind of get out on the road, and I took my cue from you guys, of course, and I've driven over 10,000 miles and a lot more in plane across the country going to new build sites. And so I have a very different perspective of where we are right now. But just going from what you just said, I wanted to ask you what you're thinking about these sudden and massive drops we're seeing in credit scores for those borrowers that were in default on their student loans but had not been reported to credit, and if you kind of are taking that into consideration in your view of the consumer. Thank you.
It's a fair question, but I mean, I don't look at consumer credit quality, to be honest, and nearly as deeply as I once did. I only look at it quarterly when all the companies report, and at least at this point, I don't see any worrying signs. I mean, maybe as the student loan situation filters through, you'll start to see increases in delinquencies and losses, but I really haven't seen it yet.
Melody, do you have a follow-up question about housing? Oi. Melody, Steve, can you still hear me, Steve?
Yeah, I can hear you.
Yeah,
Yeah.
yeah. I don't know, Melody. She can't hear. So, Melody, if you'd please leave the room and come back, because I don't know what to tell you. We're all good with Steve, and so Melody, I think it's your connection. So, Melody, I know you just dropped down off the stage, but I would actually urge you to leave the room and come back. We'll get back to you, Melody. I promise when you come back. Okay, so Dilly, who?
Dr. Cat Bear
Yeah.
had her hand up, and
Okay.
then to Deer Point.
All right, Dr. Cat Bear and then Deerport. Dr. Cat Bear, welcome.
Hi,
Welcome, Doctor.
I joined this I joined this space a little late, but I think Steve was speaking and he was talking about consumer credit and how he doesn't have a view into that. I actually used to own it, but it got bought by a private equity fund, and I work at a private equity fund, and we only deal with essentially the private subprime rent credit market. But we do with consumer credit, so much smaller loans than something like mortgages. And I can tell you that we are on high alert. I know you guys mentioned the student loan drops. When we do underwrite that, and across the industry, what we see in that underwriting. So the thesis of what you guys hear in spaces is not really how it works. Ideally, we don't really weigh that stuff when you're deciding if you're going to give someone a small loan. You are not going to say, that they're defaulting on their. We don't have a high weight on that. However, most of the automated underwriting systems that we all operate, they have algorithms that. I'm sorry, give me 1 second. They have algorithms that they run that typically do score-based underwriting, right? So essentially, the problem is that when a lot of these loans that have been delinquent for a period of time, but they haven't essentially been reporting. As of May, the average credit score that we're expecting to see drop in, when you get down into subprime credit, we're looking at. We think it's going to be approximately a 70-point drop for people who had those things. So it could skew a lot of our data. Right now, the initial stuff we're looking at, we have quite a few portfolios that we look at. It's not too severe. However, the thing that we have seen that has had an insane uptick is delinquent autos. Delinquent autos in the subprime credit world, that is causing a lot more turndowns. So the turndown ratios, if you compare it to historic numbers, we have quite a bit of data of historic numbers at the fund. It's significant. Like the approval ratings are down significantly because of the turndown reason of past due autos. Typically, you're not going to lend someone a small credit retail installment contract. When you look at the ones that are publicly traded that are big in this market, such as Affirm, those companies, they're really short term loans, right? So they're like splitting a payment in four. Some of them have different products where they offer something that's like a credit card and stuff like that. But a lot of the stuff that's more private, it's not publicly traded. We go on a little bit of a longer term, little bit of heftier loans, larger purchase size, but I would say under $8,000. So the thing is that once, even if these.
Cat Bear, I don't want to interrupt, but we got such a huge room and we got a lot of speakers in. So if you could please like ask, we're blessed to have Steve here. If you could please, like, as they say, land this plane and ask him a question, I would appreciate it.
Let me
I
your
was
question.
I was just giving him a view into it because he said he
No,
didn't
yeah,
have
no,
a view
no,
into the private credit world.
yeah, Cat Bear, I understand that completely, and I really love listening to you. As a matter of fact, I'd love to have a space with just you talking. I'm learning a lot from you, but we've got Steve here right now, so if you could please turn this into a question for him, I'd appreciate it.
I'm sorry. I thought I was answering his question. I apologize. I don't know who Steve is. I heard him say he didn't know anything about the subprime
All
private
right,
credit world because it was private.
I think Steve has probably forgotten more about this than all of us will ever know. You might want to go look. I don't mean to be rude, but you may want to go look up who Steve Eisman is. So
next.
with respect, so Cat Bear, thank you for that. Melody, you back? Did you want? I don't know how much of your Steve's answer you're asking about student loans, but maybe let's just get on to housing more generally. You have some views about. You're down the southeast, and you and I were talking the other day about what's going on in places like Texas and in Tennessee and Florida and in California. So maybe just go on to housing more generally, Melody.
Yeah, absolutely. So
Austin values are down 20%.
correct.
I'm sorry. I'm sorry. Who is speaking, please? I think that was Lou, and Lou, I'm going to put you back in the audience because we can't have this. And if you want to raise your hand again, you can, but it's not fair to the 500 people who are in this room. Melody, go ahead.
Sure. So generally, Steve, I would just want to ask you, what do you think about how unaffordable housing has become? And really, more specifically, how much speculation has really kind of gone on steroids?
I mean, I think what's going on in terms of affordability in our country is tragic. And it's not just that rates are higher. I just think, homes are constructed that are unaffordable now for most first-time home buyers. But the problem is that, if you're gonna want a policy of constructing homes that are more affordable, you're talking about building homes that are smaller. And most communities in this country have these zoning laws that won't allow that. So, yeah, I have no solution to the problem, unfortunately.
So Steve, so I guess Melody, so Melody, are you? I'm going to ask the leading question. Does that speak to you that you think housing prices are going to have to go down, at least in real terms? I mean, where are you going with that, Melody?
Yeah, absolutely. I mean, I do believe that with what we're seeing, and we're already seeing year-over-year price declines in a lot of cities. So, just generally with that unaffordability, how do you see home prices sustaining at these levels with what we're seeing with property taxes increase, insurance increase, that kind of stuff?
I mean, look, in the South, prices are starting to come down. Certain parts, regions of the country, you'll see that happen. I mean, do I think that you're going to see a nationwide decline in housing of any significance? As long as there's no recession, I don't see that happening.
Yeah, quickly, Steve, just want to tell you, because I just got back from California, LA came in with both year-over-year and month-over-month prices down using Redfin data. I just came from there. I think this is much more of a national story, and that a lot of folks are missing the short-term rental fees and exactly why all these houses were trading. But have you read or heard about that craze and just kind of how pervasive it is across the country?
I'm sorry, how pervasive is what?
The Airbnb short-term rental investor
Yeah,
speculation.
that is not something I know particularly a lot about.
Okay, all right, George. I don't want to waste
No,
your time, but
that's fair.
just
Much appreciated. Let's keep this moving because we got a lot of speakers. People want to ask questions. So I want to go to Paul and then David. Paul, good to see you. What's on your mind? Paul?
Thanks, George. Yep. Yeah, Steve, do you see like a potential liquidity crisis with private credit and private equity investments? Particularly, you're seeing Yale they're looking to sell $6 billion of their private equity. Harvard had to issue, I think, $1 billion of bonds to cover, essentially those two have issues with donations, and that's why they have a cash crisis. But is that going to create some issues around marks that come out when they see these sales, or is in general like the private credit or private equity going to cause issues for other large investors that are, maybe not the endowments?
I mean, the two issues are this: the IPO market has been very weak for years. That's been a problem for private equity. Any sort of sales have been done by private equity selling companies to each other. It's kind of like a circle jerk. Um, but I don't see that, that fact that Harvard, Yale, and Princeton are going to sell their stakes in the secondary market and they're going to take it at a discount. I don't see that as a crisis point, at least not yet. I think something much worse has to happen for there to be a real problem with private equity.
Does that create the requirement for some of these other investors that have to mark their levels to
That does not.
where they're saying, no, okay,
It does
yep.
not. That is the if this is like the venture problem, like in venture capital where it's let's say the last round was done. Let's say the company did a first round at 100, and then the fifth round was done at 800, and now the company's worth 50. But the last round was and that's no joke. And the last round was at 800.
Yeah.
Venture capital, not only will it not mark down the investment down to 50. If the company is trying to raise money at 50, they will discourage the company from raising money at 50 because they'd rather let the company just die very slowly so they don't have to take a bad hit.
Well said, Steve. Hey, Paul, really thank you for that. You got anything else, Paul, or go on to David?
That's it. Thanks, guys. Thanks, Steve.
Thanks, Paul. David.
I think Deer was
No,
next,
no,
and then
no. Well,
David.
they're Bobbsey twins. I don't really care.
Okay,
I mean,
they
all
are.
right.
They
So,
sure
all
are.
right, David and Deer. I'm gonna let you guys fight over who wants to go next.
Yeah, yeah. You
No,
guys fight
you
over
know what?
it.
Because I am the gentleman, I will let Deer go, and then I will go after Deer. Yeah, a very quick question here. Steve, thanks for your time. Obviously, we kind of talked about U.S. financials, not too much worry there. Just given where growth is in Europe, and I know you have watched European banks, the interesting thing that I've noticed is perpetual COCOs, which is kind of a barometer that I like to use to sniff out any sort of credit stress, at least within Europe, have actually been massive outperformers. So do you think that there's something that's being mispriced here where maybe, that's going to switch to fixed tenor COCO starting to outperform, or do you just think right now markets are pretty complacent, at least within the banking sector?
I just don't think there are credit issues within the banking sector. You brought up Europe. I mean, I'm very negative on Europe just generally. I think it's a complete no growth world. I actually did interesting podcast with a guy who wrote a book. His name is Wolfgang Munchau, and he wrote a book with an absolutely spectacular title. The title of the book is Kaput: The End of the German Economic Meltdown.
Steve, is this a relatively recent book?
It's very recent. This is one of the nice things about the podcast is I was thinking about, months ago when I was thinking about doing this, I drew up like a list of topics that I would want to explore. And one of them was basically the title was going to be something like, "Why does Europe suck?" And um, and I couldn't find anything. And the only thing I found was Mario Draghi wrote a 100-page white paper about things that needed to change in Europe, and it was so bad I literally fell asleep on page 10. I mean, it was one of these things written by a politician who doesn't want to insult anybody. But then I came across this book by Wolfgang Munchau who really laid it out, what the problems are. And the problems as Germany goes, basically so goes Europe, and Germany has a lot of trouble because they have not been able to change their paradigm from traditional manufacturing to where the world is going. And so I'm not positive on Europe at all, just generally. But I don't have a problem with the European banks.
Right. Who's next?
So yeah,
David?
considering that line of thinking, Steve, thank you for the time as well. I have a fairly simplistic question. There's been a great deal of conjecture surrounding foreign investors participating in U.S. markets, both in fixed income and U.S. equities, and I was just genuinely curious your perspective on that.
Perspective in what sense?
In the sense that personally, I have the perception that it's overblown. Again, like we were just discussing, European markets don't look that favorable. There might be some divestments within U.S. equities, as we've seen in like Norges sovereign wealth fund, because of the systematic risks management that might come into play. But in reality, I don't feel like there's going to be any significant shifts in foreign investors within U.S. markets. And I was just curious your perception on that.
I completely agree. I think, I'll just give you an interesting statistic. In 2007, the size of the U.S. economy was $14+ trillion, and the EU was roughly the same. And today, EU is like, I think, 19 trillion, and the U.S. is 29 trillion. So where would you want to invest? Not Europe.
Well said. Well said. All right, let's keep moving. I think Rob Isabitz is next, followed by Rusty. Rob, welcome.
Hey, welcome. Hey, Steve. Nice
No,
to
wrong
be
Rob. Wrong
introduced.
Rob. Wrong Rob.
Oh, I'm sorry.
Rob Isbitz. Rob Isbitz.
Yep.
Isbitz, you there?
Yep. Yeah, just a pleasure to speak with you. So when it comes to financials, and I know we keep going back to this, but is there a point down, let's call it the market cap spectrum, whether it's regional banks, et cetera, where you do start to see the possibility of another crisis brewing? Thank you.
No, I mean, do I think there could be issues in specialty finance if there's a recession? Sure. There's always problems in specialty finance when there's a recession, but it's not something that I'm particularly worried about for the overall economy.
Fair enough.
Yep, not a redux. Thank you.
Thanks, Rob. All right, I'm losing myself here. But Rusty, and then
We had Rusty and
then Rob B. Rusty, welcome.
Mhm.
Hey, George, thanks. Hey, Steve. Appreciate you coming on. I just want to get your thoughts on AI. Is there an area in particular, whether it's like chips or mining or just the industry in general, what you see as a maybe a positive outlook down the road?
I'm very positive on AI. I mean, that's a lot of my personal investments are in that area, and names that you'd all know. Um, this is where I think most of the spending is going to be, but it has tremendous tentacles. It's not just chips. It'll be whatever apps anybody eventually develops, to the need for electricity, to more utilities, to more um, gas generating plants that turbines that GEV will sell. I think this is a massive story with massive tangents to it, and it's where you want to be for years. And I think we're at very, very early stages, very early.
Well, okay. Thanks for that. Much appreciated. All right. So, Dilly, who's next? Rob B? I lost track here.
Yes.
Rob B, welcome. Rob Bezgian, sorry. You're up. Please unmute yourself.
Yep. Hi, Steve. During the right before the last crisis, we saw a huge surgence of synthetic products, CDO, CMBS, MBS. Do you have thoughts on the current huge issuance of synthetic products for retail investors, namely leveraged ETFs, option overlays, et cetera? Do you have any thoughts on that?
It's not something I've really closely examined. As long as the banks aren't doing it, people could lose money, but it's not. I don't think it's a systemic problem.
Great. Steve, allied to that, one of the other folks in the room sent me a question they wanted me to ask on their behalf. And again, I'm kind of guessing. It's sort of like move without the ball. I'm kind of guessing what your answer is going to be. Probably, I don't think it's a big deal because it's not systemic. But they were asking, what do you think on BNPL and Klarna and all this sort of stuff?
Oh, buy now, pay
Yeah,
later.
that stuff. It's
I mean, it's tiny.
right.
It's so tiny relative to the size of like credit card lending.
Doesn't matter.
It doesn't. It doesn't. I mean, hedge fund guys who like to traffic in these names, God bless, but it doesn't matter.
Right. Okay. Steve, what happened to let's go to commercial real estate a little bit. A year ago, time flies around in front. I can't remember exactly when it was, a year ago, 2 years ago. Regional banks are melting down, blah, 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 blah. So I can imagine you got more exciting fish to fry. I know a lot of the questions in this room have been around financials because historically that's been your area of expertise. But to the extent you maybe just still follow it, do you have any thoughts on commercial real estate and the potential that might have maybe essentially for some of the regional banks? But I don't know, like that problem kind of got really quiet. So like, why did it get really quiet? And do you have any thoughts on commercial real estate?
I think it got quiet because, at least in some cities, people seem to be going back to work in offices, and so the market got a little bit better. Um, would I want to own commercial real estate in San Francisco? I certainly would not. Um, but it's a problem for certain regional banks, but it's not a systemic issue.
Okay, thanks for that. Appreciate it. Let's keep moving here. We're going to go to DS and then Dury. DS, please unmute yourself. DS.
Hi, Steve. Hi, Steve. As a fellow podcaster, I love your show. And thank you for being a proud Jew. Let me ask you a question about Apple and Google. Um, I think Apple needs to fire Tim Cook just based on Siri, on how far behind they are. Thoughts on that? Also on Google, it seems like Google's search is coming to an end. All the kids, they don't Google search, they chat GBT. So thoughts on that?
Thanks, DS.
I don't have any thoughts about Apple and Tim Cook, and I don't think Apple cares what I have to say. So I'm not gonna volunteer anything.
There you go.
With respect to Google, the only thing I can say is that I think it was about a week ago at the Google antitrust trial, a senior VP of Apple was testifying, who was like in charge of services, and he said that like either April or March, whichever of this year, the searches at Google were down for the first time in the 22 years that Apple's had a relationship with Google.
Yeah.
So the chat GPTs of the world are starting to have an impact. Now, what Google will be able to do about that in the future, I mean, who knows? But it's certainly a negative data point.
Thanks for that. Brendan, good to see you, my friend. You got a question for Steve?
How are you? Yeah, I just wanted to piggyback on that and touch on the fact that I read today. Actually, 60% of the search traffic that was driven there was directed towards ChatGPT or GPT-like tools that they're basically serving them like the most, you know, what I mean, popular or interested link actually away from themselves and to ChatGPT instead of having that search and that AI feature be there. So like that was a little shocking to me as well. Not only was search down, but what I found so crazy in that case was the actual loser there would be Apple, right? At the end of the day, because Apple would not be able to receive the revenue from Google. But at the end of the day, they're going to keep the default search being Google because all of us, as an experience user, right, we would want that to be the default search. So they'd be punishing Apple, yet they're trying to punish Google. So I found that also to be kind of like, you know what I mean, eye opening in that case is that they'd be punishing in that statement with, you know what I mean, Google for what they've done, but Apple is the net loser there, correct?
I don't know exactly. I mean, all I know is that Apple is pays. Sorry, Google pays Apple like 20 billion plus per year, but I don't know the exact nature of the contract and what drives it, other than it's the default engine.
Yeah. Thanks for that, Brendan. Let's keep moving here. We're gonna go to, and this guy, by the way, this guy earns, I think I got the right guy. This guy, R. Monroy. There's a thing up in the nest. I put Steve. I don't know if you know about the nest. You'll have to get your tech expert, your daughter Danny, back in. But if you touch above your head, Steve, you'll see shared by George Noble. You'll see some tweets up there. And this R. Monroe fellow, our friend, new friend here, he put a tweet in from Boring Business, said, "This is one of the greatest scenes ever captured on camera, and no one convinced me otherwise." R. Monroe, did I indeed take that from your feed? Am I correct? R. Monroe, please unmute yourself.
Yes, that is correct.
Awesome. Awesome. What and I can't so that's why do you like that scene so much?
Well, it's just, I guess I kind of lived part of that story, but just thought that it also kind of captured, you know, I guess a lot of the contradictions, I guess, that were going on back then, you know,
Right.
between kind of the buy side and the sell side.
For sure. That's great. Just thank you for that tweet. So you have a question for Steve?
Yes, I do. Steve, you know, we've run some pretty large federal deficits here recently. And I was just wondering if somehow, unlikely as it may be, if the federal deficit was reduced significantly or even eliminated, would that change your outlook of the U.S. economy? Thank you.
I'm not the federal deficit is not my bugaboo. So, I mean, do I think it'd be a good thing if we reduce the federal deficit? Sure, but I'm pretty positive on the U.S. economy to begin with. It would just make me more positive.
So, Steve, is it fair to say, just gathering, listening to you talk? I mean, sounds like you're really a stock jockey or a stock guy. They're different horses for courses. Some people are top down, some are bottom up, some momentum, some are chartists. Do you tend like? I mean, obviously you have macro views, otherwise you wouldn't have been so, been so big in the financial short back then. But how would you characterize your overall approach, Steve?
And it's what I said before. I'm very story oriented, and I think that the best economic story in the world is the United States. And there's just a lot to do, unless there's a trade war. A trade war would put a kink into everything. But other than that, I'm pretty sanguine about what's going on in the U.S.
And how does valuation figure in your thinking?
It's a good question. Um,
Another annoying question for me.
and now it's not annoying. I've thought about that a lot over the years. The way I think about it is, in good times, people care about stories, and valuation takes a back seat. And in bad times, they start caring about valuation. But if you go back, let's say, to the internet bubble, what broke internet stocks was not valuation. What broke internet stocks was a recession that made people realize that the earnings of these companies were disappearing, and then they sold them like crazy. So the downside is a lot more. But I don't find that when people's stories are mostly intact, that valuation matters all that much
Right.
during that period.
And as our friend Michael Kentritz always says, it's not like your point of valuation is well taken. It's not like everybody wakes up one day and says, "Oh, XYZ is expensive. I'm going to sell it today." No, it's got to be some change in the fundamentals, some change at the margin that causes change in expectations that cause people to want to sell. So
Correct. I mean, one thing I would say for people who short stocks is to short a stock where your thesis is that the stock is expensive is a death wish.
yeah, you need a catalyst.
You have to have some sort of fundamental
Hundred
catalyst.
percent, 100%. All right, let's keep moving here. Stock gamblers is next, and then I think Dury has another question, and then Rusty. Stock gambler, please unmute yourself.
Yeah, just talking about valuations. I was going to ask another question. Maybe I can ask two if George lets me. But the valuation question: what do you think about Tesla? It's valued like 50 times more than all of the other car companies combined. Do you think it's going to 3,000 like Kathy Wood is telling us?
I don't have an opinion about Tesla. I mean, I generally don't have opinions about cults. If he does all the things that he says he's going to do, maybe she's right, and if he doesn't, she's wrong. And I have no more insight into it than that. I really don't.
Hey,
Is it time to buy Bitcoin? That was my second
oh,
I'm
question.
sorry. Say that again.
Is it time to buy
yes. All
Bitcoin?
right, yeah. Hold on a second, Scott. Gambler, before you, let me rephrase that a little bit. So this will cool it, but include that question. But Steve, do you follow Bitcoin and crypto? And stock gamblers starting to ask, what do you think of Bitcoin right now? But do you have any thoughts on? Let's just start with crypto and Bitcoin in particular. Do you have any thoughts on Bitcoin?
Yes.
Yes, I do.
Please do share.
So my thoughts on Bitcoin and crypto is twofold. The first question you have to ask is it a currency? And the second question you have to ask is, if it's a currency, why would you own it? Um, and with respect to the first question, is it a currency? I don't think that's an important question anymore, because there are enough people out there who think it has value. So, why does gold have value? Because people think it has value. So that's not a question I think that has meaning anymore. The more important, interesting question is, okay, it's a currency or a store of value, whatever you want to call it. Why should you own it? And here's my problem with Bitcoin. It's that if you ask the people who are the pontificators about Bitcoin, why should you own it? They all more or less, as far as I can tell, say the same thing, which is that fiat currency has been debased. There are too much deficits, and but you can't short the dollar because all currencies trade relative to one another, and the dollar is just as good or as bad as anything else. So buy Bitcoin as a hedge against the debasement of fiat currency. That's the thesis, as far as I can tell. Well, my response to that is, if that's the thesis, then on days where people are petrified about inflation and interest rates are going up and Nvidia is down 10%, Bitcoin should go up. And on days where Nvidia is up 10%, interest rates are down, everybody's happy-go-lucky, Bitcoin should go down. And the problem is that it acts inversely to its own thesis. The correlation of Bitcoin and other cryptocurrencies to Nasdaq is.
Joey,
I
hey,
I don't.
I think we lost him.
Steve, we lost you for 10 seconds. If you could just rewind what you were saying, Steve, for 10 seconds, please.
No, so what I said is the stock, Bitcoin and fiat and cryptocurrencies act inversely to their own thesis. So it seems to me that if that's the case, then all they are is just people speculating for speculating sake. So that's not something that I do.
So you have no position in
So
Bitcoin?
I have no opinion. I have no opinion
All
about
right. Okay. Got
whether
it.
you should own Bitcoin or
Well,
not.
Steve, I want to inform you, George Noble's going to buy Bitcoin this
Oh
year.
God.
He told me.
They're going to burn me at the stake, and I think Dilly wants us to be on
I'm
video.
gonna make a Bitcoiner out of George Noble in one
I think
way
we're going
or
to use
another.
I think we're going to use Twitter video on this, right, Dilly? Like for the first
Yes,
time.
that's what we need to
All
do.
right, there we go. Hey, Steve, how are you on timeline? I don't want to keep it too long, but I mean, you got a few more minutes.
No, I have some
Okay,
time.
cool.
Go
All
ahead.
right, so I guess this is not as I told you it wasn't going to be as bad as going to the dentist. So I think you're enjoying yourself. If I don't know any better. All right, so I want to go. I think Paul. No, we're going to go to Deep and then Paul. Deep, welcome. Please unmute yourself, Deep.
Thank you, George. Another great space. I have a question. We often get these tweets from Nightingale Capital about a $200 million tower selling for 20 million. So is there a real problem with the commercial real estate? Steve, do you see anything there? Because I live in Vancouver, like a real estate is hot here, like all the time. So I don't know what's going on there in the U.S. Like I see all the time in Baltimore and all those places, the spaces are sold for pennies on the dollar. Is there any issue of contagion there?
I don't see commercial real estate as a systemic issue. It's potentially a regional bank issue. It's a CMBS issue, but I don't see it as a contagion issue. I just don't.
Appreciate it, Deep. Thanks. All
Yeah,
right, we're
thank
gonna
you.
go. We're gonna go to Paul and then Brandon. Paul.
Yeah, deep. That was my question, but I got another one. Steve, in terms of unemployment, where do you see really unemployment going to, given you know, like maybe we have a slowdown delayed by all the tariff kind of back and forth, but do you see unemployment increasing significantly to where there's going to be real concern? Like the U.S. really hasn't seen very high unemployment, excluding COVID, since 2008. Do you think we're going to be heading to higher unemployment because of AI, the economy slowing down, or kind of just less demand as as the U.S. demographics change over
I,
time, given
yeah,
population?
I don't have an opinion about what AI is going to do to employment. So let's just set that aside. With respect to employment now, um, if there's a trade war, there'll be a recession, and unemployment will go up. And if there is no trade war, there won't. It's a completely circular question to me. I don't see employment as a leading indicator here. I think it's completely dependent upon what President Trump does with respect to all these trade negotiations and et cetera. So that's the only important question right now.
Thanks, Paul. We're gonna go to Rusty and then Brendan. Rusty.
All right, I got a really tough one here. Um, what is your favorite comic book?
All right,
That is
now we're
actually
cooking. Now Steve woke up. All right, good one. Go
that
for it.
is actually a very easy question to answer. My favorite comic book, and I think that the greatest comic book ever written by far, is Sandman by Neil Gaiman.
Okay, I was like holding my breath here.
And then
Awesome.
So yeah, so
and if
Steve,
you like that, then you read the whole thing and you agree with my opinion that what you should do is then read
What makes it the best?
it's like reading Shakespeare. It's unbelievable. It's just like cut far and away, like it's literature, and
Okay.
really.
and it, and I swear, I mean, it's just another art form.
Love it.
And if you like that, then what you should read afterwards is the spinoff, which is Lucifer, which is about the Lucifer.
Hey Steve, can we do a space sometime in the future just on comic books? Because there are so many Michigan types on Twitter or X. You'd be surprised. You probably could get a few hundred people just in the room talking about comic
I would
books.
be overjoyed to do a space about comic books. I could talk about it for
All right,
hours.
so Steve, I'll do it, but you have to co-host it. I'll run it, but you have to like deal with the questions. I don't know diddly squat about comic books. All right, we,
Okay.
we we will do a comic book space. Done. Okay. All right, so let's go to Brendan and then David. Brendan.
Well, piggybacking off of that, I would actually, on a serious note, I would love to know what the most impactful book, like you ever read, or financially, like that you found, like you still have today. That one, piece you still go back to and read. For anyone in the audience that might want to pick up that book, and
Um,
yeah, go
I'll
ahead.
answer that. I'll answer that in a particular way. The most important author for me with respect to my career, getting into Wall Street is Judge Richard Posner, who is probably the greatest legal mind in the last 100 years since Oliver Wendell Holmes. He's written about, I think, 40 books. I've read, I think, every single one except two. And he actually became a friend late in life. Um, but the reason why he's so important to me is that so I went to law school, I clerked for a federal judge, and then I went to work for a law firm in 1989. And lasted only a year and a half. I hated it. I did not enjoy being a lawyer. And I was trying to figure out what to do with my life. Um, and I thought, hey, maybe I don't want to practice law, but I could teach. At which point, for some reason that's so long ago, we're talking about like it's 1990 at this point. I read my first book by Judge Richard Posner. I think it was Overcoming Law, and I was blown away. I could not believe how smart this guy was and how much smarter he was than me. I could not believe it. And I came to the conclusion I can't be a law professor because I can't compete with this. I got to go somewhere where they are a lot dumber. And that's why I end up on Wall Street.
So I'm glad I asked, right? Like that's actually there's some insight that I don't know that anyone here knew. That's great. It's a great little story. The actual financial question that I do have is, I think we all saw credit spreads, right? Finally started to make that move up that during that whole sort of phase. My question for you would be, now that they're collapsing back down, what would be the indicator to you that there's some worry again? At what level do you think that we may get to, or what level do you
I mean,
foresee?
like I said, I think it's all dependent upon the next 90 or so days about all these negotiations. I'm not, I don't, I'm not, I'm skeptical about how well these negotiations are going to go with China, but hopefully I'm wrong. But if all these negotiations go poorly, we'll have a global recession. That's it. It's completely dependent upon that.
So
It's one variable that matters.
it's
In
not
in which case you would think spreads will shoot right back up.
Oh, of course.
Yeah, yeah. Thank you.
not the end of the world. All right, TX, my friend. I heard you last night in this space, and I tried to come in and help you and support you, but this Twitter app technology is so awful. TX, what's on your mind? You got a good to see you. Got a question for Steve?
Yes, George, hello. Yes, Mr. Eisman, I'm a big fan of yours. Read a lot about you, not only through the movie. Um, Forgive my French accent, by the way. Well, first thing I would say is that, yeah, Europe is completely fucked. I totally agree with you, especially France and
Oh,
the
oh God.
and the UK. Now, my question, which can you touched upon briefly, and I was a bit surprised by your response, to be honest, about the level of government debt in the US, but also across the world, and at the run rate of deficits that we're having that are gonna approach anywhere between 1.5 and 2 trillion a year. I mean, it's just gonna add up and add up. And where do you? I mean, obviously, you can monetize all the debt like they did in Japan, where the Fed owns all the treasuries and our currency becomes total toilet paper. But I mean, you can do that only so far. So, don't you think there is an issue there?
I don't. I mean, maybe there is, but like I said, the argument you just made has been made for 40 years. It's a long time, and it's been wrong. So
Well,
until I see,
but the levels of debt at the time were not as extreme as they are today, though. I mean,
yeah, but that doesn't argue for anything. The economies are a lot bigger too.
Yeah, I think
okay,
I
yeah.
think I think TX. I My personal view is I tend to agree with you, but that's not really the point. I think Steve's got his own way of looking at things,
No, but let's
and
put it another way. We are
yeah,
essentially piecing away, so to speak, 1 trillion a year in interest expense that could be used for many other things that are much more fruitful. So if we don't try to reduce that, and if it's just going to increase, it's gonna eat up on the kind of
Yeah,
things that would
yeah,
be
yeah,
much.
yeah, yeah, yeah. TX, I agree with you. Okay, but I just don't think this is the time and the place to talk about this because this is not what Steve spends his time where with
Okay,
that. Like,
okay, George. If you want to
no, no,
help
no.
me,
Let me put it another way. Let me put it another way. Let's say you're right. I don't think Steve is going to be sounding the is the guy who's going to be sounding the alarm first. Like he's the guy who like he was talking about before if you're in the room earlier. He loves AI and a lot of this other stuff. I mean, that's what he's spending his time on. And horses for courses. I mean, it'd be like going into a Bitcoin room and asking somebody what do they think about Indian stocks. I mean, I just don't think it's the right place to be asking this question. That's
okay,
all. But no,
okay.
with respect, doesn't mean I disagree with it. I actually agree with you, but it's not the point.
No,
Just
no, that's totally fine. And yeah, next time, do help me. I don't know what you were referring
no,
to.
no, 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 it's okay. It's a no. We
Anyway,
were talking about. Well, no, TX. I want to ask you a question. This is actually it's a joke, but if you want to know what we're talking about, are there in France? Do they have comic books? Because Steve has a collection of 11,000 comic books. Are there a lot
Oh,
of comic books in France, Steve?
yeah,
And
there
TX?
are.
they are
It's
very
it's a big it's
famous
a big
comic
deal in
books.
France.
You have Lucky Luke, which is essentially a cowboy.
Yeah.
It's a very popular comic books, and they have just lots of episodes, so to speak. They are like 35, 40 pages. And then you have the Asterix, the Frenchman, which is essentially the little guy from Gaul, like France was called back 1,000 years ago. And that's the story of Asterix and Obelix with the big guy who drinks magic potion, and they kick ass at the Romans all the time because they have that magic potion. It's very funny. It's very funny.
Steve. My friend. I think you have to diversify internationally. Do you have
And
any foreign comic books, Steve?
I think that they do English translation. I'm pretty sure.
Yeah, they do.
Most
English
have been
translation.
translated into English.
They do
Wait,
translate those to French and
David,
English.
You know about these French comic books, David?
Absolutely.
I
I'm
didn't know
from
we
France
had so many
originally.
comic
He
They
is
call
books
the
me
in
Oh
Frenchman.
John.
translator.
God!
He's the one who
Oh God!
translates
Here
it to
goes the
English.
rum. Here goes the rum.
So there's Tintin as
Oh yeah,
well. I
Tintin,
guess
of course.
yeah, Tintin is a fantastic comic book, and then there's another one that's Spirou. It's like a yellow jaguar that goes around and does his adventures.
Oh
Very
God!
interesting, but mainly child
I
oriented
think you were
jokes. So
right,
maybe not
George.
Steve's
Dilly,
favorite.
I think
Dilly,
you were right that you guys could pull some serious numbers with a comic book
I've
space.
lost control. I've
Tintin
lost
is
control of the rum. All right,
Just
Rusty, stop. Steve, are you following this insanity? Steve,
Yes, I follow it and I know about it.
you do.
He
Yeah.
feels right at
Oh.
home, George.
he's like, I have
Next
this
thing you know,
debate every Tuesday. Come on.
oh God Almighty, this is bad. Steve, this is the problem when you're coming to X. You never know what's going to happen. All right, let's go back to Dury. Dury, you got a follow up question?
Yeah, actually, my first question. Appreciate the time. Thank you, George. Thank you, Steve. Steve, just kind of a high level question for you. As it relates to the mortgage finance system in the United States today, do you find it problematic that nobody's really at home in front of the GSEs? So they're doing kind of like non-economic things. So like the taxpayers kind of ex post facto bailing out everybody that owns a home, and then also giving away money via like various, I would call them, they call them risk transfer securities, but they're effectively giveaways. So do you find that, how problematic do you find that, if at all? That's all I got.
Um, I mean, I don't know what's going to happen with Fannie Mae and Freddie Mac. It's a good thing that they're not allowed to buy mortgages anymore. They just they just guarantee the securitizations. Um, but other than that, I don't have much of an opinion about it.
That's fair. That's fair. That's an honest answer. All right, Dilly, hold on here. Oh, David, you're back. David, no comic book comment. Go on,
No,
David.
no, no. This was a lighthearted comment, Steve. I think one of my favorite scenes out of The Big Short was the Ollie versus Foreman scene where you were talking to Bear Stern, and in my heart of hearts, I've always wanted to see a live interview of that. Is there one like that's recorded that I could actually watch?
I had a someone sent me a DVD and I had the interview, but God knows what happened to it. If anybody would have it, Deutsche Bank would have it because it happened at Deutsche Bank, but I have no idea how to get it.
Right. Steve, one question I want to follow up on related to David's question. You and I talked about this the other week. So, you've seen the movie, no doubt. Do you like? I mean, you didn't play the role, so it's not one of these things you have to worry about becoming the character. Like when you have Broadway characters or movie actors, they wind up becoming the risk. They become the character. But have you have you ever been? I don't know. In public, people coming up to you or embarrassed or like is the fact that or the fact that you didn't play the role. It's like not that big a deal. I mean, or did just your friends bust your chops over it, or like how has the movie changed your life, Steve?
Um, it's gonna sound funny. Um, the only real, I mean, the thing that has changed is people actually care what I have to say, which did not used to be so, and I've become a bit of a cult figure amongst young people.
You
Um,
a cult
yeah,
figure?
I swear to God, and the reason is
Wait,
that
62-year-old Jewish guy's a cult figure? Like, how do I get to do that? I'm 68, dude. Like,
and the reason for it is that every university on planet Earth where somebody takes an economic course, The Big Short is like required reading or watching the
oh my
movie.
god.
So I'll
Yeah.
just tell you a very funny story. So last year, literally around this time, um, my wife and I were in Rome, and we went to the Pantheon, which is like one of my favorite places on planet Earth. And then afterwards, we had to get to like I think we were going to the Borghese Gallery or something like that.
Yeah.
And so we ordered an Uber, and I was standing in this little palazzo right around the Pantheon, like literally next to the Pantheon. There's like two little restaurants there, and I'm just looking at my phone, and I look like a schlub. I'm wearing like a t-shirt, shorts, sandals, a baseball hat,
Yeah, it says American tourist on your forehead. I got it. Come on.
American
Right.
tourist printed on my
Right.
forehead. I'm just standing there. My wife's like 2 feet from me, and some young guy, Italian, who's a waiter at one of the restaurants, walks up to me with a waitress, and he looks at me and he says, "Excuse me, are you Steve Eisman?"
What?
And my wife
No way.
puts her head in her hands, groans, and I turn to her and I say, "And the legend grows."
Steve, how in a million years could he have known it was you?
He saw me. He must
He
have seen
watches
me
his
on whatever.
yeah.
He sees that everybody watches whatever. He knew who I
That is
was.
hilarious. I want to know how I get to be you. That is hilarious. All right, I'm going to show for the conference just for 1 second, then we'll take final questions because we've been going an hour and 26 minutes. So, as a reminder for everyone, it's up on the nest on June 5. We're having probably the best investment conference ever, and I don't say that modestly because it's literally an all-star team of the best independent research people on the planet. We know most folks with half a brain don't work for bulge bracket firms anymore. A lot of these guys you've heard in the spaces are some of the biggest names in independent research. Jay Pulaski, formerly Morgan Stanley, doing global equity strategy. Ian Harnett, absolute strategy research, doing Europe. Louis Gave on Asia. Michael Howe on liquidity. Jordy Visser, who talks Steve's language on AI and Bitcoin. Tavi Costa, up 88% this year in one of his funds, talking on gold and other macro trends. Mike Rothman, the most senior ranking energy analyst in the street, 40 some odd years, formerly ranked number one at Merrill Lynch. Melody, who was in the room earlier, one of the foremost experts on housing. Stavros Iatridis on global strategy. We've had him in this space a couple times. John Roque, one of the best technicians on the street, 22V, another crowd favorite. And lastly, one of the Michigan short guys, Mark Cahodes, is going to be talking about short ideas. So I promise you in the next 24, 48 hours, you'll be able to register for this. It's just been slow in coming. But and there'll be replays available. So something you're not going to want to miss. Seriously, I defy anyone to show me a conference anywhere in the history of conferences. It's as good as this conference. I'm just blown away that with this assembly of talent, it literally is murderers row. Seriously, this is like the all-star team. All right, let's keep moving here. We're gonna do Rusty and Brendan. If any final questions, raise your hand. Otherwise, we're gonna close this shortly. Rusty, over to you.
I have to say, Steve, the Pantheon, me and my wife would roam. I think we probably sat at the same cafe, and we got a hard time from Italian because we asked for uh, some balsamic vinegar like a little bit before lunch, and he just gave us the hardest time. But that is the best place to go and sit and eat and just
All right.
people
All right,
watch. So
Russ, you got to tweet this out, okay? And you can put in the tweet. Steve says it's okay that Steve Eisen recommends this place as well. All right. Last question, Brendan or Dilly. I don't know if Dilly. I'm gonna let you close it. You can close it with a question, or we can close the room. But Brendan and then Dilly. Brendan.
No, I was just curious if what David was mentioning, the real life version, if you were referring to like the seminar video. I had seen someone else ask if that the real video of that scene in the movie exists, and I saw someone post a link somewhere that does have the clip of it. I'm not sure if that's the video you were referencing, but that seminar video I would love to get my hands on.
All right, if anyone knows that clip, please tweet it out. I don't. Obviously, Steve doesn't know where it is.
George, one question.
Hold on.
George, one
Just
question.
wait. Just wait. Just wait. Hold on. Um,
Okay.
who was okay? So I see David. David had another question, and Bitcoin Tina had a question. So we're gonna do David, Bitcoin Tina, and then Dilly, and that's gonna be the end of it. David, you got to follow on.
Yeah, so this is just another continuations to the story, and then I have a serious question to ask Steve. But was it true when Mark Baum went up and they were at the mortgage conference, and essentially he yells out and stands up and says zero chances of that to happen? Did you actually
That
do that?
actually happened. And when he gets up, because he gets on the phone, that was my wife calling, and I took her call and I walked out. But it wasn't a big it wasn't the it was just in a meeting with option one. That's where it happened.
Beautiful. I love it. I love it. The audacity is it's fantastic. But I'd be remiss if I didn't ask you this. It's to do with monetary policy. I think that it's an important question. I'd just love to have your opinion on this. But do you believe that we're in like a structural shift in interest rate regimes? I know that a lot of economists are saying our star is now simply at the higher bound, and so essentially we're never really going to go back to ZERP environments. And so by virtue, we probably might adjust structurally towards a higher interest rate regime in that respect, and they're calculating it roughly around 2.5%, 3% bound, right?
Yeah, I don't think we're going back to ZERP. I certainly hope not, because if we ever went back to ZERP, things would have to be really bad to go back to that. So I agree with that.
Thanks for that, David. Always appreciate you. Bitcoin Tina, and then Dilly with the final word. Bitcoin Tina, your floor is yours.
One question. Can you please remind us of your podcast, Stephen?
Thank you, Bitcoin Tina. It's called the Eisman Playbook.
I do have that up in the nest. I
Yeah,
did share a link to that. And so, Steve, thank you so much for joining us. This has been awesome. I guess my question to you is, did you ever meet with Steve Carell, and like, what kind of research did they do? Did they ever like interview you, or was it just like you just saw the movie when it was done?
I met him for breakfast on a Sunday at Three Guys on 89th and Madison. He wore a baseball hat, so nobody recognized him. And then he came to meet my family. And that was the only time I ever had any real long conversation with Steve Carell. So just to end, um,
Well,
so that was
what kind
all.
of questions did
That
he
was the
ask
only
you?
time he and I spoke of any to any degree. And yet, but people who know me really well, when they saw the movie, their reaction was he really got me, and my reaction was he kind of got me, but I don't think I was quite that angry. And then what happened was so the movie came out in the end of 2014, early 2015, and in April of 2015, the Consumer Financial, not I'm sorry, the Financial Crisis Commission published all its documents, and one of the documents was their interview of me. It was a transcript, and that interview had taken place like in 2009 or 10, and I hadn't thought about that thing in a long time. And I read the whole thing. You could find it, and after reading it, I realized Steve Carell was right. I was that angry.
wow.
Aren't we usually?
So
Billy, you can close it up.
Yeah, no, that's super interesting. But yeah, thanks for joining us today. George, do you have anything else that you wanted to cover?
No,
This was
Steve,
awesome.
I hope you enjoyed as much as we did, and you can see it. We like to fool around here a little bit. This has been absolutely great, and I hope you'll come back again. This is for
I
you're
want to know
for
more about comic books. I'll tell you that.
well, you
He's,
know what?
he's,
I mean,
it's his opening. It's going to be the opening segment on his next
no,
podcast. Come on.
seriously. I mean, maybe what we'll do is I'll help arrange it. But we'll get David and Steve to have to co-host it, and they can kind of like be the dynamic duo, double team the whole comic book subject. And we'll see. I mean, who knows? It's just another vertical to conquer next. Steve, thank you so much. You've been very generous
thank
with your
you.
time. This has been great.
Thank you for your time.
Good
And
night,
thank you to
everyone.
your
This has been
daughter
great.
for helping you out with the tech
Yeah.
I
support.
Kudos to
appreciate it.
Danny. Kudos to
Mm-hmm.
Danny.
Thank you. Kudos to Dan.
Take
Yes.
care. Bye bye. Good
Okay.
night. Good
Bye
night. Good
bye.
night.
Bye, guys.